Hey, what's going on, guys? My name is Tana, and welcome to Crypto Bible. I hope you're all having a very lovely morning. I've got a very busy morning as I've got to be out today. I'm going to be in London enjoying my time with my family. London Eye cruise, Buckingham Palace, all that good stuff. Tourist in my own country. But I'm up nice and early because I still wanted to get a video out for you guys. And I'm going to be doing a few in one. There's quite a few interesting headlines today. Obviously, Binance yesterday taking down. Not even taking down. They're going to be taking down futures for currencies, trading pairs such as Euro, AUD, and Great British Pounds. But that kind of follows on from the story that I have right now, because a lot of people have obviously lost a lot of money doing futures. It's not something that I recommend doing. I've personally lost a lot of money in the past as well when it comes to futures, and I have certainly learned my lesson when it does come to that. And what they've done here is actually something pretty good. They've actually done something pretty good, which I think was needed. Some people will disagree because some people love futures margin trading. However, in this case right now, we've actually got an example of someone who's lost a lot of money. And, due to a lot of it going on, Binance has actually reduced how much you can actually do it by, like the leverage. So I was panicking. The high risk bet sparkling a backlash at Binance. So crypto exchange slashes leverage after customers and regulators balk at high voltage derivatives. Binance is to cut drastically the risk clients can assume in one of its flagship cryptocurrency products after a backlash from regulators and consumers over high-risk derivatives that can quickly leave users with painful losses. The crypto exchange, which facilitates hundreds of billions of dollars worth of trades a month, said it will reduce the maximum leverage, the amount investors can borrow to magnify their bets on its futures contracts, to 20 times from the previous peak of 125 times. So that's a big drop. So crypto mogul CZ, who runs Binance, said the cuts were in the interest of consumer protections and would be applied over the next few weeks. Binance has announced its decision on Monday after a similar move by rival FTX at the weekend. It comes around 2 months after traders lost an estimated 8.6 billion through liquidations during a crypto flash crash on May 19th. So this is what I mean. Whenever you're like trading futures with leverage, it's very scary. And I've been through it where I've had a lot of money on the line. And this is one of the mistakes that I've made in the past that, of course, I've learned from. And it's one of those things, you think you're going to go to bed and wake up with a lot more money. Instead, you go to bed and you wake up with a text and an email saying that you've been liquidated, and you're like, your heart just drops. Your heart really does just drop. Like it's serious. And it's addictive because where your heart could drop and you feel like absolute crap, on the other side, if things do go up, you're feeling like the king in the world. And I get the feeling. It's emotions fly all over the place. However, they have brought the leverage down to only 20x. So people should be able to manage their positions a lot more better, a lot more easier. Because like I said, man, it is very scary when you have got it on like 30, 40, 50x. And you're just sitting there waiting, man. It's the worst feeling in the world. If you're watching and you felt it, let me know, man, because I felt it. It ain't great. Very big bets. The UK financial watchdog has banned the sale of crypto derivatives to retail traders over concerns they are too risky. And regulators around the world have tried to crack down on the unauthorized sale of these products by crypto platforms. However, offshore exchanges like Cayman Islands Incorporated Binance have continued to offer these derivatives even to residents of jurisdictions where they are banned. Binance is a leader in the crypto derivatives known as the perpetual futures, which track the price of digital coins ranging from Bitcoin and Ether to more esoteric tokens like Dogecoin. Potential returns and risk are magnified by the very high levels of leverage users can take on. So yeah, like I said, not great, but at least they're bringing it down. That is actually some good news. To be fair, again, it may not matter to some people because it might not be there very soon. Great British Pounds, Euro, and AUD, as I've said before, will be banned in regards to the trading pairs from the 10th of August. So, just watch out for that. If you've got positions open and you're using one of those trading pairs, make sure you've closed it by the 10th of August. Now, the second thing that I wanted to cover, which is a little bit annoying as well, because this looked very promising. And it's one of those things because we got the news and then people were like, oh, no, it's just the same as what Apple and Facebook done. It's fake news. And then we got an insider saying that it's definitely happening. In fact, let me just actually get that. Amazon insider Bitcoin, because it was only yesterday. It was literally only yesterday that we received this news I'm about to show you guys now, and I covered it in one of my longer videos yesterday. So Amazon definitely lining up Bitcoin payments and token confirms insider. I'm not going to read the entire thing. That's basically what the title was. This morning, Amazon denies accepting Bitcoin, sends it tumbling. So they're blaming Amazon for sending the Bitcoin price tumbling, which I found quite wrong in my opinion. I don't think that is the case at all. In fact, I'll show you guys exactly what I think happened, and I was showing it in one of my videos yesterday midday. I done a full-on video on everything to do with Bitcoin, how it got here, what we were expecting, and what we could expect to see. And in my live stream, one thing I done last night was I showed all of the objectives we need to get through before we can actually get even more bullish. And the very first objective we needed to get through was actually breaking out of the range that we've been stuck in for nearly 2 months, and that range being this one right here. And we came to the top of the range. If we go down right there, we came to the top of the range and we rejected it. And that's what I think has happened, but they're blaming Amazon for it. But there you go. That is the first objective, in my opinion, guys, just to kind of break out of this range right here, and then go to the next step, which there's a lot to do. But I'm talking of breaking the 41,000 area before we can start looking to what we need to do next. But it hit that range and it rejected it. I fully believe it will go back and retest it. Not financial advice, but we'll have to wait and see. Anyway, Amazon denies accepting Bitcoin and sends it tumbling. A job posting for a digital currency lead had pushed Bitcoin past $40,000 on Monday, its highest since June 15th. No, it didn't. I don't know. Anyway, it's just my opinion. What can I say? Amazon.com is denying a media report saying the e-commerce giant is looking to accept Bitcoin payments by the end of the year. The report from London City AM newspaper, citing an unnamed insider, sent the world's biggest cryptocurrency up as much as 14.5% before it trimmed gains to last trade at 6% higher at $37,684. Notwithstanding our interest in the space, the speculation that has ensued around our specific plans for cryptocurrencies is not true, said a spokesperson from Amazon on Monday. We remain focused on exploring what this could look like for customers shopping on Amazon. The company on July 22nd posted a job opening for a digital currency and blockchain product lead. Earlier on Monday, the job posting from the retail giant had stirred questions among analysts over whether the move could eventually lead to Amazon accepting Bitcoin as a method of payment. The company's denial sent Bitcoin tumbling below $37,000, while rival coins including Ether and Litecoin also fell. So there you go. We had a bit of a fall. Investors rushing to cover bearish bets had fueled that earlier rally that drove the coin at one point up more than 17% on Monday to $40,545. Its highest since June 15th. More than $950 million of crypto shorts were liquidated on Monday, the most since May 19th, according to data from Bybit.com. Shorts were piling up as we were moving down, assuming we were looking at a minimum of $25,000, which was expected across the board, said Vijay Iyer, head of Asia Pacific crypto exchange Luno. But then there were heavy accumulation in the $29,000 to $30,000 region, which caught a lot of these shorts unaware and hence led to the spring upwards. So yeah, I mean, there you go. I mean, like I said, I don't really believe that it was Amazon that done that stuff. It was meant to happen, in my opinion anyway. I just think timing was perfect, as it always is. But yeah, that's annoying. Insider letting us know that it's definitely happening. Shut up, seriously. Anyway, guys, I'm going to leave it there. Hope you guys have enjoyed. I've got another video coming out at midday, another one of those educational videos. So please be sure to catch that. There won't be a live stream tonight, guys. Obviously, I will be out. But when I'm back, I'll try to do another video for you guys. Hope you have enjoyed. If you have, please leave a like down below. Subscribe if you haven't already, guys. And make sure your notifications are turned on. And I'll see you very soon. Have a good day and take it easy.